Hi, everyone, and welcome to the prop trade. It's Friday, the 6th of February. There's been no non farm payrolls today, but they are due next week, next Wednesday. And I was just looking at the Reuters and the Bloomberg consensus for this week. 70,000 is the Bloomberg one, 75,000 is the Reuters consensus for next week, 135 is the biggest expectation. I think it was from Citibank. And the lowest is actually a drawdown, negative 10,000. That's coming from Standard Chartered. Wolf Economics were just been on the Bloomberg show, and they were talking about 85,000 for next week. So it's obviously lots of revisions coming in as well. So the jobs market is the one that's sort of added to the spookiness of markets this week. There was a catalogue of numbers yesterday where we had challenger job cuts, the worst since 2009. Claims had jumped up to 221,000 from 212,000. ADP came in at 22,000, not the expected 48,000. So we'll see what non-farm payrolls look like next week. Obviously delayed. It's not adding to the sentiment, the comfort of the markets. Markets hate disruption, they hate uncertainty, and obviously the record government shutdown and this recent one last weekend that's lasted 3 or 4 days, longer than expected, has stopped NFP coming out today. Stocks down again yesterday. Nasdaq was off 1.5%, 1.6%. In fact, the Dow was off 1.2%, and the S&P was off 1.23%. But as you can see here on our little chart here, this is the Nasdaq 100 on our derivative markets here. Let me just make my great big bonds a bit smaller. So there we are. So massive week for the stock markets. We started off all right on Monday. The new month started positively. We closed here on the Nasdaq at 25,760. But yesterday we went all the way down to 24,300. So 2,000, big point drop just from last Thursday. Last Thursday, new all-time highs at 26,300. And yesterday, just over a week later, we were down here at 24,300. So a massive decline for the stock markets. A lot of things going on. We had that rout in the commodity markets. We have this big worry that's escalated this week about the software companies, kicked off by, I think it was Tuesday, it all kicked off, didn't it, with Anthropic. Talked about their AI tool sort of doing away with software developers, and market overreacts. But that's, it's fairly typical action, stock market action, when we've had such a unprecedented rally. We've been going on and on and on. And so the market now, as we compress at the top here, we're in this big congestion zone here at the top of the market, all-time highs, and it's not knowing what to do. Where do we go? Is this good? Is it bad news? This massive, massive, eye-watering capital expenditure that the big tech companies, not just the Mag 7, but the big, first movers have all been investing in over the last few years. The earnings numbers coming out this week and last week showing, some potential worries over future earnings. Return on this huge investment. Where are they going? Where's the productivity increase? Where will it affect our bottom line? Microsoft, for instance, obviously a big software developer, hit. But Microsoft in their defense last week, talked about, we are developing these AI tools principally not only for our customers but also internally. We're using them, we're exploiting them internally. We still got massive capex expenditure. Same with Amazon last night, the last of the big seven to report. Their stock is down 7% on opening trades. We're still 15 minutes ahead of the open trade. But they were down 7 or 8% last night after earnings came in. Again, better than expected, but the forward guidance wasn't great. And it's just the return on the huge expenditure. There were some misses in the details of the Amazon data as well last night. So we had an immediate markdown. It was the operating income was at 16 to 21 billion, despite a 14% increase in net sales. So and growth in their key AWS group at 24%, but that disappointed the market. A sector growing at 24% on an annualized basis, but still disappointing what markets were expecting. So shares are off. I mean, they've had a really, really strong run. 200 billion here. I'm just reading the numbers here. 200 billion of capex for 2026. AI, chips, robotics, and satellites. Monster moves, and some regulatory issues in Germany saying they will appeal it, despite having already paid 59 million euros to to the German government. So anyway, a huge week, massive sell-offs in the software side of things. Obviously, we saw the massive decline in gold and silver, the big we got metals here. Again, another monster rally, but the higher things go parabolically. We've been saying this for weeks, haven't we? The more aggressive the sell-off, and this was this time last week, wasn't it? It was last Friday when we had that big tanking sell-off on Friday, fell again on Monday, went all the way down to virtually wipe out all of 2026's gains. These magnificent, unprecedented gains just for the month of January, but most of it was wiped out at some point on Tuesday before we recovered this week. But we still anchored under the key $5,000 level. But still, these are historically very high prices for gold. The fundamentals haven't changed. It was just a squeeze on a lot of the derivative markets, a lot of the options market. Profit taken at the end of the month as well last month, the end of last week, at the end of last month, and we went to that all-time high 5,600 and came all the way down close to 4,400. So again, a massive 25% plus decline for gold from last Thursday to Tuesday's low in literally a 3-day move. And I say we're still capped under 5,000 going forward. Better day today, but still you'd see it's an engulfing candle in yesterday's big negative day down. So see where that lags. So we'll look at the technicals a little bit more. I'm just doing a quick overview of where we are as we end this first week of February. And again, for stock markets, just going back to the stock markets, February can be quite a delicate month, quite a weak month for stock markets. So it's not that unusual once the earnings season comes to an end, and we're where are we? We're 3-4 weeks into it now. Start the second week of January. We're into the second week of February next week. So a month's run, and we're coming to the end. We've had the pharmaceuticals companies this week. Some good numbers from the big two, Pfizer and Merck. Eli Lilly beat quite significantly. They were up 10% at one point on Thursday. Obviously, AMD's numbers were fantastic. Palantir, big bogey company here in the UK, had really good numbers as well. And I say Google numbers, 55% increase in capex from Google, $185 billion just on spending on stuff. Capital expenditure, 185 billion, just it's monster numbers. Their shares were down as well, even though they'd beat on some of their ad revenue. So very volatile week in the stock markets, added to the volatility in the silver and the gold market. Silver went higher and more aggressively than gold on a percentage basis, and therefore it reacted more aggressively. So from $121 on last Thursday, this morning we've been as low as $64, so more, nearly 50% decline in the silver price. And today, interestingly, weaker than it was last week. So silver under $70 earlier today, down to 65. See that today? That's today's chart. Down to 64, under $65 as well at one point. We've recovered to $75 as we speak, but huge sell-off. So that fib is not relevant anymore. If we stretch that, that's the leg so far. So obviously it's too early to say that leg now is over. As you can see, the 38.2 is round about there, even if we continue to go lower. So 84, 85, $86 now is the first key resistance, major resistance to the upside. And the 20-day moving average here sits bang on now, coinciding with the 50% fib of this big sell-off from last Thursday on the silver market at $93. So 2 key levels there on that chart. But obviously, I'd argue this, we can't really put this fib chart on here now, given that we've plummeted new lows again just today. It's not over. The down leg isn't over till it's over. So you can see here with the stochastics were still, converging lower, we're still moving lower, still in the direction to the downside, to the overbought zone. Last time we got overbought was all the way back here in October when the price was down here at $47. And even then we thought that was pretty high for silver, and indeed it was historically, but what a blinding move it had during the second half of December and all of January. Massive moves. So they've come home to roost quite aggressively this week. In the Forex market, the dollar still sort of holding up. The biggest mover today is the Aussie yen. Remember, we've got those elections in Japan on Sunday. More clarification from that. We had Trump supporting Ms. Takamichi. I think there was talk about her actually going to the US, if she obviously depending on her getting re-elected. I can't remember where I found that, but that was earlier. I think that was a note I read earlier this morning. I've got some news out. Didn't mean to do that. I meant to close that and open that. Sorry, excuse me, at the top of my head for a minute. Let me just find the calendar. Here we are. So today, I say it was obviously first Friday of the month. Non-farm payroll was due, didn't happen. No real market moving noises yesterday or tonight, last night, from Trump in his speech. Canadian jobs came in weaker than expected, and unemployment was better than expected. So a decline in jobs for the Canadian economy just being recorded. Again, these are clean data, so that's quite a big slump, having been relatively positive recently. Let's see. I can bring this down. It had been relatively positive, weakened last month, and then it slumped back into negativity this month. But it can be quite volatile, Canadian jobs market. But it's a shame we've certainly that's what the administration in Canada we talked about. It's a shame we've had a decline in jobs of nearly 25,000 for January in that February number. Economic consumer sentiment. Remember, we had that big slump a couple of weeks ago from the Consumer Board, consumer sentiment. So see what the University of Michigan looks like in a little over 40 minutes there. So we'll be still live for that, and we'll have a look at the week ahead in a moment. So let's have a look what's going on as we come into the US Open. Is anything going around? So the dollar has come back quite significantly against the weakening yen, continuing. So at $157 yen. Swissy back to 77.70. So say the dollar's holding its gains this week. Euro 118.10. Again, we talked about this sort of pivot now through 118 here on a daily basis. So euro up today. It's down for the week. So that's Friday, Thursday, Wednesday, Tuesday, Monday. So we opened the week at 118.52. And we're closing the week struggling to hold on to 118, so 50 pips to the downside for the week. The extreme was this morning when we went to 117.60, but still the 20-day holds its first test today. Interesting to see where that finishes on an end of day basis. Aussie just back under 70, or at 69.95, so we've slipped under the 70 again. Signs of the dollar strength, but Aussie up today from 2 down days. And sterling 135.90, under 136. Again, a down week for cable. Obviously, we've had lots of pressure on the Prime Minister and his judgment around Lord Mandelson here in the UK. His own backbenchers, his own Labour benchers saying, he's fighting for his political life. When all that sort of noise starts, Prime Ministers tend not to get out of it. We'll see how it ends, but it looks like the writing may be on the wall for the Prime Ministership of Keir Starmer. However, he's not Boris Johnson. He's not Rishi Sunak. He's only been in office for 14 months. He's very, very unpopular, and in the popular press, obviously, it's where the presses set up in the UK. And obviously we've got this populist right-wing Reform Party that's riding high in the polls, making most of that. We've got a very disparate opposition that's broken down in the UK, trying to fight for its life as many of its members drift further to the right. And there are local elections coming in May. So, some huge, many critics of Keir Starmer within his own party as well made some huge errors, political errors, misjudgments, one would argue. So, whether they need a clean start, less than 2 years into his prime ministership, we shall see how it all pans out. But key weekend ahead, and we're only now something like 10 weeks away from those elections, so that's starting to loom, the local elections here in the UK. So anyway, sterling, it's been down for the stronger dollar this week from 138 last week, 138 plus last week. Big down day yesterday and all that uncertainty. We bounced a wee bit today back against it also. 135, hugely psychological level for cable historically. And it looked like we were going to test that yesterday. It looked like that at one point earlier today we were going to test that as well. Just because of the hourly chart, you see, this morning, late last night, sorry, we were down. It looked like this was continuing into 135. Didn't happen. We found support at 135.20, and we've removed up from there. Obviously, big cap at 136 today. So I say general forex market. I say the biggest mover, if you trade those, the strongest and the weakest today is the Aussie yen. Be careful holding the yen, obviously, over the elections, but there's a big old move today for the Aussie yen. Again, look at the daily chart from a move down yesterday, gobbling all of that move down, up today, engulfing candle, so pushing higher again. So 110 on the horizon if the Aussie continues to accrue against the weakening yen. Clarification of what she may do. She gets the mandate she's after on Sunday. May suddenly turn this on its head. So if you've got any open risk against the yen, be careful. Politics can move very, very quickly. So I say be careful on that if you've got that open over the weekend. So anything else you want to have a look at, my friends, let me know. And let's go and have a look at how the markets are opening. We have 5 minutes ahead of the open. My two favourite assets to trade at this time is let's start with the big one, which is the Dow, and how we've been going. Let's go down to our 5-minute trading platform, this system. So where have we been? Well, the last cross of the was here. We hadn't actually touched the outside the Bollinger Band. We didn't touch till here. So would have been long. So the Dow has gone long there on this 5-minute at there we go. That's our last long there at 49,145. Target one's been hit, and now we've retraced, so we're doing stopped out in the second half of that. But that then crossed lower, interestingly, to go short. Hasn't happened. It's retraced back to the upside, so it's still biased to the upside. So we're looking for another touch of the outside. In fact, we've got one there, but then we've gone against it and gone up. So just waiting for the news to break as the volumes kick in on the open of Friday. Remember, as I was saying earlier in the week, we got this disparity between the movement in the Dow and the Nasdaq in particular this week. But we were more in unison yesterday. The Dow, as I said earlier, lost 1.2%, and the wider Nasdaq lost 1.6%, and the S&P lost 1.25% yesterday. But anyway, that was long, and the first half of that has been closed now. Now waiting to see what's going on. The Nasdaq, similar setup. We'll come back to these higher time frame fib levels, but that went short here at 13.45. It's just hit target one. So there's the cross here. We've been down. There's the cross on the way up. So that's hit target. So we'd have got in here using this strategy. So let's just do that. Let's mark that there. That would have been our entry there on the 5-minute time frame. Target one has been taken out here. So we would have closed half of it. Obviously, coming into the open, anything can happen with the volatility of the open. But as you can see here with the K and the D line, we're still moving lower. We're in the under half of the Bollinger Band. We have dropped quite significantly. So our stop loss, which had initially been up there at the top of the Bollinger Band, the top of the turn in this trade, would be now, I'd have pulled it down right tight onto my entry now, so I can't lose any. I've definitely bagged my first half of the trade, and I'm just going to track this lower. If indeed it moves lower, obviously the volatility might kick in as we open. So that's the a winning short trade on the NASDAQ 100 into open. Entry was 24,709, and we've got 24,660. So 30 odd pips or 30 odd points. Nice to start off with. So half of that is 15. So still got 15 open. See what the volume, see what the market looks like. If I just click the volumes on, you see it's building up to open. Here's 25, the 1425 candle, and just waiting for the open. See if we've got down 2 minutes and 1 minute. There's the obviously different parameters. That's gone short again. That's a continuation. That's interesting. That's a continuation trade low here on the 2 minutes. So 2 minutes leading us down. But let's go back to our 5 minute time frame. And again, where have we been today? We haven't marked these up yet, have we? Let's sort of take this quickly up to the hourly chart. So our open this morning. So interesting. Our low from this morning was all the way down there. Haven't got any little lines on there. I have not. Let's pull that one. Anyway, let's use these rays. So that's our low of the day there. Let's change the color on that to make it red. That's the bottom. And our top of the day has just happened now. So we're going against the higher time frame trade, this hourly time frame. Make that a dashed one. So that's our high pre-market high. That's our pre-market low here on the NASDAQ. And we were short, weren't we, on the 5 minutes? So let's go back down to our 5 minute time frame and reset that. There we are. So first profit there. So we're scrolling this down now. Now my stop loss, obviously that's pretty much. So we are, as I say, going against the time frame. So my stop loss now, if I just put that on there, it's it was here. I just rammed that in. That candle's complete now. I've pulled it in. So our entries, this blue line, second half. So we've taken half of it off and may reverse on as the volume kicks in. So NASDAQ continuing to move lower, but we're way above, as we saw that. I'll zoom this in. Our lows of the morning, or our Asian session lows here, literally as the market opened this morning, we've rallied away from that. So up, down, up, down, up, down. So nice Elliott wave move here on the 5 minute time frame. 1, 2, 3 to that one, 4, and now we're sort of congesting around here at 24,700 is our top here on 780, isn't it? So, but we're still in the money on that one as we move lower. Let's zoom in. So that's our short position. Oops, sorry. A short position on the NASDAQ. So we're in the money on that one. Dow, what's the Dow? I can't remember what we were doing with the Dow. We were long, weren't we? Yeah, long. And then we were looking for a short of a touch of the outside. So hasn't happened. There we go. So we've got this disparity again. So the NASDAQ again opens lower. The Dow, on the other hand, has moved higher. That was our entry. First target there. So it moved lower, but we bounced off here. Didn't cross again here at 2 o'clock and right here on the open kick-in volume. So our second position, I would probably, to be honest, there 5 minutes before, I might have closed a little bit more out. Having got in here so close to the midline, I would have waited till probably took some off there as it first touched that outside Bollinger Band, then waited, see what that looked like, take a little bit more off there. So instead of 50-50, because we were moving higher, take another 20% off or 30% off and left a little tail of 30% on, and that's rocketed higher. So I'll be dragging my stop loss up quite aggressively from this low here to the bottom of this candle, see if it gives up. But I'm happy to run that up higher, and lots of points on offer on the Dow there. So that was our entry. First target, I haven't marked all these on, have I? First target would have been, I would have taken that off there at the touch of the outside of the Bollinger Band. Weak touch because it was just with the wicks, it wasn't with the body of the candle. Taken some more off there ahead of the open. Depending what sort of morning I'd had, what sort of day I'd had, whether I'd have closed that out and just gone away for the rest of the day, because it's 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 2:30 here in the UK, but left some on because we were going in the direction. Remember the stochastics are still moving up, so we're still with the trend to the upside. Obviously, bit questionable now because we're now moving into the overbought area. So the stop loss that was down here would have been down here initially. Was let's see how this still yet to complete. I might have even sort of pulled it right up here on the shorter time frame, given the move we've had. But you don't want to be too careful. So let's just change that. So that was T1. Change that to purple. That was T2. Change that to purple. And you see, I'm letting the market tell me what to do. Okay, so I got a bit aggressive with the stop loss there, but we haven't moved out quite nicely. Let's go back to the Nasdaq. See what the Nasdaq is doing. So the Nasdaq, there we go. You see, we got to our pre-market high, which was, in fact, it was there. I put it a bit too high. So again, that would have been enough, perhaps, to finish off. I would have had a target there. So certainly. Oh, hang on a minute. What we were? Hang on. Where were we? We were short or long? No, we were long, aren't we? We were long. We were short down here to the outside. That was target one, and it's reversed on us. So this has gone long as well on the open. So that's been stopped out. The second half of that has been stopped out. Sorry, we were short this one. We were long the Dow. So the Nasdaq has turned around. So we've got first half. Our entry was here at this first blue dotted line. Our stop loss had been pulled down there, so we made that on the first move. So from there to there is our first profit, and then as the prices come back to there, our second half is there. So in total, add up the two blue lines, and that's our total profit, and we're out because it's hit our stop loss. And now we're waiting here. Obviously, we've gone to the other side of the Bollinger Band now. Now the rules around this is that we're waiting for a cross to go short. But obviously, this is opening volumes, huge candle and massive volumes. So from initially going short pre-open and on the opening few minutes, we've turned around, and so the Nasdaq is now positive. Is the Dow still positive? Indeed, it is. So there we go. So I'm happy to drag my stop loss up now. Sorry, I don't want that anymore, do I? Happy to drag my stop loss up to the, locking some profit in as the top of the Bollinger Bands comes up. So we're dragging that second half up. So this one is profit all the way. The other one's been stopped out, and we're waiting to go short. So let's take that off. It's confusing. So that's our stop loss sort of dragged up a bit as the market goes up. So any vicious return, we're locking in profits from our 1 of 10, our first entry here. But we've only got 20% left, as you say, so we've broken it down on the upside. So stocks are starting positive. The Dow's up, the Nasdaq is now up. The S&P, we're a little less than 10 minutes into the open. The S&P's done exactly the same thing. Moved high. I don't trade this on this short-term basis, but it's gone long here to target 1, didn't get to target 2. Might have come back and stopped you out. but that's again continuing to the upside. The Nasdaq. If I look at my short-term trading, last night there were a couple of trades which I I took, but I didn't actually broadcast them because I was out. But we were last night we were long euro pound after a really strong day. That's out of the money at the moment, and the pound Swiss was a short, and that's also out of the money currently. But again, I didn't broadcast these. Pound CAD was a short yesterday, last night. That's in the money, just about still. I think I'm didn't quite get to target this morning. Pound Swiss was also short again on, so I was doubled up on pound Swiss. That's out of the money. That one is closed though, the second one, and they were the only two forex trades yesterday on the fast moving system. Euro Swiss and CAD Swiss are setting up on the aggressive system for tonight, and the DAX and US oil, interestingly, US oil triggered yesterday to the downside yesterday, but DAX is triggering for a potential long position tonight on the end of day basis. So see where we lay 24,700 my trading platform. So there we go. Nasdaq long still, and it's just a stop loss now, isn't it? There we go. So that's the next candle. I'll just leave it there. Actually, get a bit too silly, can't we? But Nasdaq's long, and the Dow we are out of. But this is looking to go short now because we've got a bit stretched, but big volume and big volatility. Lots of things have happened. People putting their toes back in the market, in the tech market, as the week comes to an end. But we'll see how that all ends up. So let's have a look at elsewhere. The other big mover this week, I'm sure you're all aware, Bitcoin into 60,000 at one point today. If we look at the hourly chart, what an absolute collapse we've seen. And 60,000 somewhat inevitably got tested lately. In fact, it was last night. I thought it was in the Asian session itself, but probably on the spreads, probably on momentum from the brokers. But the trend has been down all week, and as we've been saying all week, well, longer than all week, some of the key levels we looked at for support have just capitulated straight away. 85,000 wasn't tested at all. It just banged through here on a big 4-hour candle. The 80,000 and 80,500 level, which is that intraday low we got back at the end of November. That's been on our chart for a long time. Well, since it happened, doesn't it? We've been talking about that level. Again, didn't provide any sort of level of resistance to the downside. Another big 4-hour candle crashing through it. That's the 85,000. There's the 80,500, and then 75,000 did provide a little bit of support. So the first test on Monday, we bounced off it. We came to test it again on Tuesday, but it did capitulate as the European traders got running on Wednesday, and then we fell through 70,000 yesterday morning at the beginning of the European trade, and then this morning we continued to decline. And not yesterday. Yesterday we went through 70,000, and then I was right now weekly video we were at 66,000 when I was writing it last night, and by the time I'd finished writing it, we'd gone into 64,000, 62,000, and then into close into 60,000. So we've bounced off that. We're back to 67,000, but a bit like gold is under 5,000 to close the week. Whether we actually close under 70,000, we'll see. But we're under 70,000 now, and 70,000 is a key level we hadn't put on. We were talking about these three levels: 85, 80, and 75, and within a whiff. And this is what particularly Bitcoin can do for you with regard to volatility. That's why lots of people like trading, because it does move really quickly. You just got to be really, if your trend's running, now don't be afraid to run with it, because it can be really, really aggressive. As you can see, we marked this earlier in the week, didn't we? This 70 to 60 channel, which is basically where we were going sideways for all of 2024 before the rally in December 2024, and we took off quite aggressively. But that's a big old channel. 60, 65, 70, 65, 70 is where we were the last time we were down here. And we broke into it really aggressively. We've gone from one side, the top to the bottom of that channel within the space of a couple of days. Massive move for Bitcoin. It's happened before. It'll happen again. It's the nature of the asset. Highly volatile, but any portfolio obviously should include these digital assets. And big old move down. Great for a trend following trader as we've moved lower. If we look at my favorite one, the simple crossing EMA strategy on the daily basis, massive move to the downside. And as we said, we've been saying all week, 20th of January was the key breach of the 21 EMA here on this strategy, and we've just moved down. Big candles are negative candles, the 29th, the 30th to run out January. That looked like potential was enough. End of the month, 80,000, didn't happen. Bang, through 75,000 on the 4th, and then a massive sell-off yesterday as we went through 70,000 and into 60,000 today on an intraday test. Bit of a bounce today, but look at the number of red candles compared to the number of green candles. The only positivity you can take out of that is the size of the green candle today is more significant than we've seen for a long while, but it's the only one compared to the big significant red candle. So is the selling over at 60,000? Are we satiated, bears? It looked like it was 70,000 could have been some buys. It didn't happen yesterday. Are we going to get back to 70,000 over the weekend? Remember, it was last Saturday as well, which added to the move down at Saturday and Sunday last weekend. So watching what's happening this weekend as well as we complete the last week of or the first week of February. So Bitcoin remains vulnerable. The trend remains down. Careful trying to catch the bottom on that one, but certainly some will be doing that at 70,000 and certainly at 60,000. See where that one ends up, but that's been running for a while. Sorry, Bollinger Band and Stochastics. So there we are to the downside. So oil triggered, I say, on my trading platform yesterday. Today we've got a potential short on US oil. It's again probably a UK oil triggered yesterday. Brent was short yesterday. It's got halfway to target this morning. It's come back to sort of entry level 67.32 on my trading platform oil. So that triggered short yesterday. I'm not taking that. I'm not trading that. That's relatively positive still. And potentially WTI doing the same tonight. Bigger move, bigger candles now. That's more muted. Haven't got to and then rejected this fib extension level and back under this other fib extension level, and these moves to the high side. But obviously on the geopolitics side of things, so we got the Japanese election on Sunday. We got Iran and America, the United States meeting in Oman. So the Iranians got their own way. They moved it from Turkey to Oman, talking nuclear, not ballistic, just nuclear. Desperate to avoid an attack from the Americans, having seen what they can do in Venezuela. And that's the rhetoric that the Americans are saber rattling about. So we shall see. No more protests on the streets. Trump didn't jump in to help them. Stepped back. So see where this takes us. But the threat remains there, and there's a lot of hardware in the region, both on the sea and surveillance troops. Obviously, the thing in Venezuela, they had somebody on the inside, or they had a team on the inside. They won't have that, I don't think, in Iran. Obviously, the Israelis are key when it comes to intelligence on Iran. So, trigger happy Netanyahu and Trump. So we'll see what happens if we need some more distraction away from certain Jeffrey Epstein files. So let's see what happens over the weekend. But God bless the people involved. So oil potentially short this Friday, but I won't be taking that personally. Gold we had a look at earlier, didn't we? So more or less done through everything. Let's just go back to our indice trades. Are we still moving higher in the DAX? Strong candle today, so we'd like to get back to 25,000. Obviously, wouldn't we today here on the Nasdaq, the higher time frame? Whether we actually do that or not, only time will tell today. But we are still along. Would we even stopped out? I can't remember when we moved that. I've probably been stopped out of now on that wick. When did that happen? Let's go down to the 2-minute time frame. When did we move this? Yeah, we would have been stopped out of 40. Was it? No, 49. That was we were still. That isn't because we haven't been back here. 49. So let's go back to the 5-minute. Did I move that up before that candle completed? I'll move it up after that candle. I'll move it out after. So yeah, I'm right. Let's take the rough with the smooth. That would have been stopped out, even if we'd had it at the bottom of the candle. It still would have stopped out on the volatility. That's what happened in it. So anyway, successful trade. Long. Hang on a minute. What am I talking about? I've got this the wrong way around. I mean, the Nasdaq we were short and then we were out, weren't we? We didn't. Or did we? Did I say we? No, we were looking for no. Oh, I'm going mad, aren't I? This was closed. We were short, weren't we? Sorry. There was target 1. There was target 2, and that was out and closed. And what we're looking for here on the Nasdaq is a reversal. So I don't know what that red line's doing there now. That's not a short. It was the Dow. We were long and pulling up. There we are. The Dow. We have still got 20% on, didn't we? So we pull that up. So let's just get that just below that wick there in the 5-minute. We've had our first completed red candle from the open, first negative candle from in 5, 10, 15, 20, 25 minutes. So again, if this reverses, nice final 20% on that long position that we took here and then re-entered. There's the long position here on the cross, and we crossed up. It was there. That was back and up. T1, T2, and then up to the upside. So we're trailing that higher. So from initial review, we've moved higher on the Dow. Somebody's asking me, can we do it on gold? Let's have a look. Of course we can. So gold is what? So we're long here on the 5-minute. Last cross was here. So there's the move down. There's the cross on the Bollinger Band. So there's the cross on the. Does it happen there? No, it wouldn't have. We wouldn't have. The cross is here on the completion of that candle. Whether that had crossed significantly enough to trigger a long there, I'm not too sure, to be honest. It probably would have taken it there. So using this strategy, that's gone long there, right at the end, and now it's touched the outside. So I'm going to have now. So that would have been the entry there. Let's do this for you. The stop loss initially should really be down here, bottom of the Bollinger Band, even conservatively all the way down there. But as you can see, there's a long way to go. So initial stop loss would have been down there. We've moved down initially and tested into the 20. We then moved up, and then we moved up. So I'm going to be happy to put my stop loss here now. So that's my entry. Our stop loss is now there. It's still quite aggressive, but what I'm dealing with. Let's change this for you, and let's just leave this one on. We'll track this in real time. So entry here, stop loss here. First time, I will take some profit off when we next hit the outside of the Bollinger Band. But we've got the moving up. So this is where we sit now here on our gold trade. So People again asking me what we do here. Airdrops new. Hello, airdrops new. Hello, my friend. How are you? Let me know if you're whatever you're trading. Let me know. So the key about sorry, you're down here now, aren't you? The key about successful trading, my friends, is this here, this distance here. So I haven't actually, obviously, I haven't really taken the actual trade here with on our platform. But basically, this is the risk. This is our entry. This is our risk level. So this, if this goes wrong, what we don't want is this to lose a lot of money for our account. So whatever the size of our account, whether it's 50,000, 500,000, 5,500, if this goes wrong, we want to be losing about 1.5, 2% maximum of our entire account. So let's assume we got this in 4936. We got filled and 4924. So there's 12 points basically. So those 12 points should equate to not less or not more than a maximum 2% of our account if it goes wrong, if we lose it. If you've got lots of other trades open, I'm really good at airdrops new. Airdrops new, that's a good handle, my friend. Good. I don't know what it's again, my friend. Tell me if you're trading. So we're just in the money just a little bit at the moment. So we haven't quite touched target one. So I've still got the full position up. So I'm partially going to close this when we get to the top. But so that's the 5 minute. We've been long, or it's been trending higher. So the beauty of this, we may or may not move. We may retrace quite quickly. So let's see what happens on this. So it may end up being a loser, but we've pushed into the overbought first here on our 82, our K handle, percentage K, percentage D. Obviously, always lags percentage K on stochastic. So if this is going to get up here, we may have run out of steam. But let's just see how it all happens. We saw the big move on the indices, so be the right side of the market. I'm good. Airdrops new. I'm good. My friend, I could say. So let's just see how that goes. Should we just leave that? I was going to go back to next week. So I've been here an hour already through the open. So next week, the second week of February. As I say, a non-farm payroll is going to happen. Let me just set this up for you for next week. Non-farm payroll is going to happen on Wednesday. If you weren't here at the beginning, I'll just react to that. And CPI is Friday. I don't know if the calendars have already got there. Major news, though, on Wednesday, on Sunday, we talked about that for a while. Lower house elections. Prime Minister Takayachi, she's looking for a mandate for herself. I know real Donald. He's sent this out on Truth Social. The great country of having a very important leadership lady on Sunday. He's backing her because she's a very much a right wing politician, very much economic follower of Reagan and Thatcher. She holds Thatcher here in the UK as one of her heroes, and so that fits very much with the mantra of Trump of lower interest rates. But ironically, the Bank of Japan are obviously looking to try and raise interest rates, trying to stimulate, and she's going to do that with some fiscal spending, which is always quite interesting, given these right-wing policies that these politicians employ. But anyway, so Tuesday, retail sales data, Chinese CPI on Wednesday. So non-farm employment change Wednesday, as I said. So Wednesday 11th now becomes quite significant. We've got non-farm payroll data. Is it going to back up what with this wobble we've seen in the jobs data this week? The JOLTS, the Challenger jobs, I say, was the worst since 2009. The biggest job cuts, the Challenger number showed this week. Claims were ticked higher, still very, very low at 220,000, but they'd ticked higher here, the weekly unemployment claims here. And that worry about consumer confidence slipping from the consumer board. And let's have a look what that's going to look like in a minute. Actually, we're going to go back to that because that could really spike things up quite interesting as well before the week's over. So non-farm payroll Friday, Wednesday 11th, we'll be with you for that. Weekly claims on Thursday, and GDP from might be some more positive news for the embattled Prime Minister in the United Kingdom, and then core and headline inflation on Friday. So actually quite a busy week again. It was going to be quite quiet, but with the shutdown we've had in the US government again this week, that date has been delayed. So we've got CPI and non-farm payroll next week. So next week becomes even more important. Obviously, watch the Open on Monday following the election. So in Japan on Sunday, that'll be really, really key. As I say, if we just go back to today, um, shit, can I go? It doesn't want to let me go backwards, will it? To today, there we are, Friday the 6th. We got this consumer sentiment out of the University of Michigan Business School coming in a minute, so that could be quite interesting for our positions that we got going there. So we'll watch that before I actually wrap up. So key week next week, non-farm payroll Wednesday, CPI Friday, inflation out of China, retail sales numbers as well, GDP from the UK. Lots to get our teeth into next week. Again, the earnings season continues to roll on next week. Let's just have a quick look who's reporting next week. I haven't got that here. Okay, a nice free site for you is earnings whispers. Let's have a look for next week. It's not going to give me calendar. So if we just look at here, this is Earnings Whispers. This is a free site for you guys who following tracks. So it's cooled down quite significantly. But Thursday, the big day, 150 people, 100 companies on Tuesday, 125 companies on Wednesday and next Thursday. So look, some of the numbers on Wednesday. Coinbase reports Thursday. Pinterest, so some tech companies still. DraftKings, they've had a really good run. Dexcom, so yeah, some big names, or some popular names, not big names. Big billion numbers. These are all relatively small. Three. That's Vertex. Yeah, so some big hitters in there. Some names like Merck. I thought Merck had reported. Oh, Mercer. Sorry, that's not Merck. So still Moderna, Wendy's. Yeah. So let's see the mind, not the market moving numbers. Tech companies. So they're all in. Already. So quite a week next week on the earnings front, but still relatively important. So this is really, really interesting. The consumer sentiment here out of Chicago has actually come in better than expected, 57.3. Last month was also upgraded to 56.4 from 54. So that, again, that's quite a significant increase, 54 flat to 56.2. These are only sentiment indicators, but from that consumer board number that was a bit weak, this is a better number, 57.3. The Canadian PMI 50 is actually better than a whole lump better than expected, but the employment is disappointed today over in Canada. But as you can see here, this is picking up again from the slump in November. So we've had better numbers in January, February, and now. December, January, and now February out of Chicago for consumer sentiment. Obviously, much lower than it has been, but it's starting to pick up again. The administration will be happy to see that. Also, inflation is the story of services disinflation. So expectations. Again, this is just a sentiment indicator from the business school, but continuing to decline. Expectations of inflation, not down to the 3% yet level yet, but it continues to move in the right direction. Again, administration will be happy with that number coming out. So they're two positive surprises for the US economy, and that might have pull down our indexes, but we are still, where are we? Stop loss was here, wasn't it? So let's pull our stop loss up to our entry now. So it's a flat trade, even if it goes the wrong way now. We may have peaked out there. So we got, well, just gold, wasn't it, we were talking about? So gold, we got in there. I've taken some off in the last 5 minutes. We'd have closed some profit out there, and now our stop loss is at entry. Okay, so target one, not actually target one, but half of my position risk is now closed. I now have a risk-free trade. We got out at 49.48, so you can see this 49.50 is providing a resistance. And if we've been watching this on the lower time frames, we might have got out as we've spiked here. How high have we got so far today? 49.58. So another $8 was on the table, and from where we first got, but our stop loss is now, we can't lose on this second half of the trade, so that's locked in. Our index trades, the Nasdaq was has reversed and taken us out on that 3 o'clock Michigan data. So we're back down to where we were, but it doesn't matter. We've we've rallied that, and that's closed now. So that's a short here now. You see that that's across there. It's just happened there, and we'll go short, or this system would go short now on the completion of this candle in a minute's time, back to the downside. Similarly, I'll guess on the Dow, that's moved up, but it's a smidge of it. It's a weak stop, so we're still long this, aren't we? So there's our move up. So we may roll over like the Nasdaq has, but Nasdaq more sensitive to consumer sentiment than the Dow. So we're just trailing our stop loss up now. Are we going to get, I don't know where that says pre-market low. That's obviously from a different day. But it's a level, is it, where is it? It's 74971. So that might have been from yesterday, interestingly. So I don't know why that is. Is that from yesterday? Is it? I should put the date on, but it's a pre-market low from some other day. Anyway, we've got a strong start for the Dow still. So our stop loss is here, and we're banking another 30% on there. Sabia, hello, my friend. Anything you want to have a look at? We've just been doing some trading here on the Dow, the DAX, and the gold market. We were short initially and had some profit. Now went long. It's reversed here on the Dow, the Nasdaq. Sorry, the Nasdaq was short. The Dow went long initially. We trailed that up. 5 minute. The Nasdaq was short and then reversed on us immediately. So we went down here as the open, then it reversed to the upside. We were waiting for a short position. That's happened. You can see the cross there, and that's happened now. So this one, let's move these off. So the stop loss is now sort of up here. The entry now is, well, it's near where it was before when we were going long. The entry was there, that blue line there. And just take this one off for now, just delete that. And that might be a target area. In fact, our target area is initially is the bottom of the Bollinger Band. But again, see this low through here? These badump lows, these candles might, that might be, the first run. So we got 24,700, take a little bit off, 24,670. So it's still 30 points there because we got in here. Can you see where we've been filled? Because that's a low. Are we going to go any lower? So first bit of chunk, say 20% or 30% off now. There. Next target would be down here at the edge of the Bollinger Band, and then we just keep pulling the stop loss down. So now we've taken some profit off. I'll be happy to pull the stop loss all the way down there now. Not guaranteeing a no lose second half of the trade, but that's the in fact that's a bit too aggressive. That candle there, because our current candle isn't complete, so the stop loss at the end of the current candle. So if it does reverse, we'll end up with a flat trade because that's our profit. In fact, if it reverses, we'll end up with a losing trade because that's bigger than that, isn't it? If we've taken off, we've got more than 50% on. We've only taken 30% off of that low. But see what's happened there? It's reacted to this support level there, 24,6660. and this was a key support there for 1, 2, 3, 4 candles, 1, 2 candles there, so 6 candles. I've refused to go lower than this 24,667, if you like, and now we're reversing to the upside. So we might have made 20%, but we might end up losing 30%. So this might actually bring you a loser here on the Nasdaq. So we'll just let this run out and see what happens before we go. Let me just go back to the gold position. I can't remember where we left gold. We were long or short. Somebody help me, Mr. Sabir. We were long or short. We were long, stop loss here. I'm going mad, aren't I? That was the entry. Our stop loss is at entry, but we're pushing higher, aren't we? So we've taken some off there. 50% still on. The red line is our stop loss. Blue line is our entry. Stop loss is at entry still. And I'll be happy to pull that up to the wick, so we make even a little bit on the completion of that candle. I shouldn't have moved that till this candle's complete. It's always about completion of the candle. We've still got a minute to go on gold, so I'll just go back to indices. The beauty of RMT4, we could have all these charts on the same screen. I could flip between the screens rather than flip between these, but anyway, no, stop loss is still good on the Nasdaq. Short there on the 5-minute. Back to gold. So that isn't yet quite complete. We've got a minute or so to go. We've got 10 past, another minute or so. Oh, it seems like forever, doesn't it, when you're manually trading? Should mark these, shouldn't I? I'll make them colours. So there we are, new candle started. So stop loss is now at the bottom of the preceding candle, the 1505 candle here for gold. Was that target 1? Oh no, that was our entry, wasn't it? Oh God. Let's change that to green, so I'll get this right. So that was our green was entry, T1 was the blue, and now our stop loss now is here, but the stop loss, has been moved up as we've trailed up. So I'm trailing my stop loss up, racking in some profits. I'll be happy to move it to T1, which is obviously this area here. If obviously we keep going up at the moment, because that's a big old candle, and we're through the 458, the 4950 psychological round number. Are we going to stall at 460? So how far can this go? Well, we don't know, but we've been long, relatively long all day, haven't we, on the 5-minute? We just jump this up to the higher time, say the 30-minute. The 30-minute has been in the upper half of the Bollinger Band since 2 o'clock this morning or 3 o'clock this morning. So we've been high, and there's that 5K level on the 30-minute time frame. So are we going in to test that for the end of the day on Friday? Right, guys, I'm going to just leave you now. I know the trades are still open, but I need to go and get another cup of coffee. And 5 minutes can seem like forever. Anyway, see this trade, see the technique. If you want some more details, contact me on the Discord group. We're here to help. Our big news this week, as I'm sure hopefully you're all aware, is our launch of the super reliable, super resilient, super popular MT5 platform. We now have a fully licensed MT5 platform. It's live. And for new accounts, if you type in the coupon code MT530, you get a massive 30% discount, so a third off the prices, which are already very, very aggressive. If you want the super reliable MT5 and you want to trade lots and lots of EAs written over 20, 30 years for meta quotes. So pick your platform. TradeLock is still available, obviously. CTrader is also available. A relative long-time competitor with MT5, but MT5 still holds by far the biggest market share for brokers, and certainly CFD brokers in the world. So MT5 is that's your bag. Get a account, my friends. So There we go. It's nice, very good. I hope it is nice. Wow, what are you wowing at, my friend? MT4. Yeah, I mean, I say if you go to the website, I think this is my account here. It says challenge, isn't it? Sign in. Yeah, I need to sign in. So these are my accounts, but you can see what's available. The calendar platform. So the platforms now has MT5 available, Trade Locker, C Trade, as I said, and MT5 now on your phones as well, available. So full breadth of challenge, full breadth of different types of challenges now as well, with the with the prop trade version 2, as we call it ourselves. So we got instant, standard one, the classics 1-step and 2-step sides. We got instant funding and the Payflex account. That's proved really, really popular. Edge account here on Payflex, instant. We've got instant funding, different platforms. So select your type of account, select your platform. So MT5. Select your starting balance. 25,000 always a nice start. It's less than $200, but remember you've got 30% off that with the coupon code. So trade instant funding, tight targets, guys. So be careful. I know a lot of you love the instant funding. Payflex has been very popular as well, but some tight numbers. Standard prop trade step. Much more relaxed. 5% on step 1, 8% on step 2 target levels, 4% daily drawdown, 8% maximum drawdown. You don't want to be, getting near this anyway. Good quality trade. As I said, remember, maximum 2% on any one losing trade. I keep looking at the camera. It used to be up there, it's down here now. So, sorry about that. So 1.5% ideally to get you going. Now available. So $159. It's cheaper on the MT5. Sorry, it's cheaper on the 2-step than the instant Payflex. Obviously, the thing of the Payflex is you don't have to pay for it till you've been successful. So that's very, very appealing. So we confirm our selection, and then we can put our coupon in down here. Coupon code. So it's MT5, the mighty MT5 here on the 6th of February, MT530 for our 30% discount. So you're $159. We apply it. You see it tick up here. We take off near $50. It's just over $110. Gets you a massive, don't be don't underestimate this. A $25,000 account, that's an awful lot of equity. It will allow you to trade multiple currencies at once, equities, gold, and you don't be worried about running out of equity or missing an opportunity. Remember, I'm tracking nearly 50 assets on an end of day basis, all the forex crosses, silver, gold, all the major indexes, oil and other markets. So if anything triggers on my scanner, I take it. So that's when you want a decent account size, and $25,000 is a really good account size to do that. And for $100 or just over $100, $111, it's a fantastic start to get started. And remember, the beauty of the prop trade is, you prove yourself. You trade in a disciplined way. You trade it in a risk managed way. The profits you make once you've passed these challenges, that 80-90% of them are theirs for you to keep thereafter. And we can pay you. We used to pay just on Fridays. Now you can apply for it when you've passed the challenge and you've fulfilled the rules. So come and join us. Give it a go. We're here to help you as well. Make the most of it. So giveaway accounts, as always. Giveaway account airdrops, my friend. How's it done that? There's always, let's go about giveaway. There's always giveaway accounts, but check our Discord group. There's always something going on. We have challenges on a Friday afternoon, don't we? That's our there we are. Giveaways here, my friend. Happy Friday. Join the checkers tournament now. So we're giving away. Can you see this airdrops? Airdrops new on our. Make sure you're on our Discord channel. 4 o'clock today. So that's 4 o'clock GMT. So I don't know where you are in the world. I know a lot of you are in India. So that's 11:30 if you're in the Indian subcontinent, or if you're in India. We're giving away three $10,000 PayFlex accounts, which means no activation fee. That's a PayFlex account later on today. So come and join the stream later on today for that. Okay. Best of luck, my friends. I won't be there, but the guys will be there. Christian, Toby will be there to help you. There we are. Lots of people joining in already. You got 9, loads and loads of people, 20 people there wanting to join us. So I'm off. You're in. Very good. Best of luck, airdrops. Airdrops new. I will see you all on Monday. I haven't actually scheduled anything yet, but we'll probably do some more live trading Monday because, the big data's been rescheduled. So I'll change what my plan was for next week. But Wednesday, non-farm payroll, let me just reiterate, non-farm payroll is now Wednesday next week, normal time, 8:30 New York time. So we'll be live from 13:15 here on Wednesday. And also CPI, US inflation on Friday next week as well. So earn better ever. This is my account on Discord. Earn better ever. Okay, airdrops, very good. Be good, everyone. I'll see you. Have a safe weekend. Be good. Be safe, and be kind to people. That's all we can ask, isn't it? All the best, everyone. See you next week.